I was reading through some of the comments on my past videos, and I noticed somebody recently left a comment on my Peloton video saying that Peloton reached a new high, it's time to short these shares. And I looked into the comment, kind of researched Peloton, I realized seems like it's a good time for me to do another Maintenance Monday. But just to make this a little bit more interesting, I also have 3 stocks that I'm going to talk about and ones that I'm considering doing another analysis on. So let's get the intro started and we'll go ahead and review the portfolio and I'll discuss with you what I'm thinking about adding to it. Hey everyone, and thanks for joining me today. My name is Matt. If you're new to this channel here, I like to talk about finance. I worked in finance for many years, recently left though to become a real estate agent, and so now I take the knowledge that I've acquired from working in finance and like to pass that along to all of you and hopefully make it an entertaining and enjoyable way. So, as I mentioned in the beginning here, I saw the comment saying that it's time to start shorting Peloton because it's reached new highs of the stock price. And it had me reviewing the portfolio and had me thinking, is now the time to sell that position? And that's what I kind of want to go over today, as well as a few other positions in this portfolio. So let me go ahead and I'll get this pulled up, and I'm going to take a screenshot of this. Computer still restarts every time I try to record it. All right. So we're doing well in this portfolio. Now, it's not millions of dollars being made here, but given that we have about $40,000 invested and we're making a profit of just over $3,600 is pretty good. And, these are fairly aggressive stocks, but I just feel it's important to review what you have and make sure, is it a time to add more shares, sell a few shares, get rid of the portion? And I wanted to walk through that here. So the only change I've made really since this last Maintenance Monday thing is I did sell 2 shares of Shopify. Reason being is because I accidentally acquired those shares anyway, and I basically used the proceeds to purchase my position in I believe it was for Adobe. I don't exactly recall, but I believe it was for Adobe. And to me, that just kind of made sense. Again, I wasn't anticipating owning those 2 extra shares of Shopify. It was performing well. We were already at a profit, and I'm maintaining the 5-share position. So overall, I was okay with selling the 2 shares and then using that money to purchase additional shares. And that's how we added, I think that's how we had added Adobe to the portfolio. When it comes to something like Peloton, as you can tell from the screenshot, I'll pop that back up on the screen here so you can see that, is Peloton's been the best performer. Now, it is the first stock we bought. So we did kind of buy that one when the market took its dip, and we've had it the longest, so it makes sense for that to be at such a gain. But I was taking a look at kind of analyst price targets for this and just using their research to get an idea. That's what I like to do. When it comes to maintaining a portfolio, I really just rely on the information that's out there, and I like to only do my own research for those initial purchases. Sure, I check in on earnings calls, listen to interviews with these CEOs, or read for reports, filings, mergers, acquisitions, all of that to see if my idea has changed on this. But once I own the position, it's not a heavy in-depth analysis. And the price targets for some analysts for Peloton are going upwards of $63 a share, which would give us an additional $10, $9 now from where we are currently. And on 100 shares, that's an extra $900. So this is not a position that I'm going to short personally. You can do whatever you like, you might see it differently, but I really still feel Peloton now that it's kind of broken past that $45 share price range and is up in the 50s. I think that we kind of hit a new support level for it. And I think this is one that we should see continuing to grow. Again, I don't think people are going to be rushing back to their gyms. I think people like the idea of staying home in their comfort where they don't have to worry about the outside world. And if you compare Peloton, forget Bowflex and forget Nautilus. If you compare Peloton to a Orange Theory or to a Planet Fitness, I think that's going to be their biggest competition because they are also trying to create these at-home workouts for people, but using equipment you have, where Peloton integrates everything into their own treadmills or bikes that they have with their own weights and whatnot. So I really think Peloton is unique, and they're also really the first at-home gym to like really be a breakthrough in the market. So I think that they're going to continue to grow. Do I think they're going to be like a Chipotle, $900 a share? Probably not. But I do think $60 is a level that maybe I'll consider selling out of it. But for now, I'm happy where we are. Again, it would have to drop to $40 a share. I think either $40 or $37 a share before we lose money on it. And we have room to go. It's still steady climbing. So not one that I'm going to remove from the portfolio quite yet. As many of you have heard me kind of saying in the past too, I am still not sure what's going on with Walmart. Admittedly, I have not really looked into it, but I'm a little confused as to why Walmart is our biggest loser. Now, when I say biggest loser, 40 shares of Walmart has a total loss right now of $123. That's not bad. It's like a share basically is what that comes out to. But Walmart just recently announced a deal with Shopify, which is interesting because we own both of those positions. And so I thought they were both going to do well from that announcement. Basically, Shopify store owners will be able to integrate their products into Walmart.com. And I love that idea. I think that's helping. I think it goes to show Walmart is really trying to take advantage of this new world of e-commerce, electronic, online, less of a brick and mortar experience, and partnering with somebody like Shopify, who gives these local small business people, or just, something other than Nike or Champion, the ability to sell on a platform like Walmart is fantastic because the reach Walmart has is insane. So I really like the integration between Shopify and Walmart. But again, Walmart's been down on the news where Shopify skyrocketed after that news. So there's no real direct correlation between that. And it's just a little concerning to me. Walmart's not one that I'm going to drop. Again, I don't see them going out of business anytime soon, but might be one that once we turn a profit, I look to maybe sell off a few shares. Now, I probably should have said this earlier, but my strategy here is definitely a buy and hold long-term strategy. It might not seem that way with the companies that I've purchased so far, but overall, in my opinion, this is a fairly aggressive portfolio. It's a lot of growth stocks, not many dividend payers in there. We are diversified with ETFs, but one of those is a real estate ETF. So one of those, I'm being a little bit more aggressive with this than I would with my own money because this is not real money. This is paper trading. But maybe it goes to show that sometimes it pays to be aggressive because we're up over 36.42 is what it's showing right now. So I think, kind of going back to the comment on Peloton, if we react now, we could miss out on a lot of gains. We could also lose money by not reacting now. That's what we don't know, but what we have to do is stick to our plan. I don't want to sell an entire position if I've owned it for less than a year. Short-term capital gains are a pain to deal with. And sometimes if you ride it out and it does take a little bit of a dip, but the difference between paying a short-term capital gains versus a long-term capital gains could make up for you holding on to that position just a little bit longer, even if the price decreased some. I'm not sure if that makes sense. So I'll say for this Maintenance Monday, not going to make any adjustments to the portfolio right now. We're keeping the monitor, but really the only change I've made other than adding a few companies is selling 2 shares of Shopify. And again, that was to buy, I think, Adobe. So we'll see where this goes to the portfolio. But as I mentioned too, there's 3 stocks that I have on my radar. And I'm not going to do an analysis on them today because that's what I like to do on my watch list Wednesdays. But I'll give some context as to why. So the first one is going to be Dropbox. And I'll put up the ticker symbol on the screen. I don't recall off the top of my head. So Dropbox came on my radar actually when I was doing the DocuSign analysis, because I didn't realize that DocuSign was even a public company. I'm sorry, that Dropbox was a public company. And I think that they also have a really unique position in this changing world to an electronic platform, because file sharing can be huge. Now, if you're just sending contracts like real estate documents or, picture of your dog or something through email, really there's not going to be a problem with that. But if you try to upload videos and email them to somebody, it gets incredibly challenging because the file size is so large. Every one of these videos I make range from about 16 to 25 gigabytes, which I don't even really know what that adds up to, but I know back in the day I used to have an iPod with 1 gig on it, so I'd need 25 of those iPods to hold on to one of my videos. So it's just kind of interesting to see where Dropbox is creating that position. I hope that they're going to be able to integrate more into this kind of file sharing thing that they have going on, because not everybody's sending videos, but I still feel like there's a pretty big need for something like Dropbox just to be able to quickly send information, have access to it, kind of like there's a need for Google Docs. So that's one that I'm adding, and that'll be, again, more of a growth stock. They're not probably one that's paying a dividend. I haven't looked into it. That's going to be another aggressive add to the portfolio, but it's trading at around $25 a share right now. So it's one we can actually get a pretty decent exposure to for a relatively low cost. The next one is 3M. So 3M is, they make everything. They make tape, they make face masks, air filters, glue. I feel like 3M makes everything. I think it stands for Minnesota Mineral and Mining, Machinery and Mining. I'm not sure. But 3M, again, it's one of those companies that's been around for a really long time, and they pay a pretty significant dividend. They also have such a need for everything in that kind of industrial space that, to me, it's just one worth adding onto the portfolio. Now, admittedly, in those industrial areas, it's not my area of expertise, so I don't know exactly who their direct competition would be, if there's somebody with maybe a better dividend payout or maybe more consistently performing. Let me change the way I worded that. If there's one that's less volatile than 3M, which kind of hard to be less volatile than 3M, maybe I'll look into that one. But to me, that's another promising long-term investment, especially if you're one that's going to reinvest your shares now that fractional shares is available, because you can really grow that investment size very quickly if you're able to reinvest those shares, especially with them paying out that significant dividend. So 3M is the other one I've been looking at, and again, they've been one too. They're like an old school company, but are still relevant today and still in need today. But yeah, I'll just leave it there at 3M. Third one that I'm going to add to this portfolio, but full disclosure, I own, and I've owned it for a long time, and it's my favorite stock I've ever purchased, is Ecolab. Now, Ecolab is like a chemical cleaning solution company. I know, real exciting stuff. But they popped up on my radar because when I used to work in restaurants, every restaurant had Ecolab. And I always thought like the chemicals had really cool colors. That's what caught my eye. And I kind of looked it up one day, just being the nerd that I am, and realized they don't have much competition. They perform almost the same, if not better, than the S&P 500 every single year, and they also pay a dividend. So with steady performance, minimal competition, and good payouts, to me, that's just a company worth owning. Now, that's been like my little hidden secret stock, the one that I've been afraid to talk about. And admittedly, I haven't talked about it because nobody's really looking up Ecolab stock. So it's not one I know that's going to really help out my channel that much. But if you made it this far in this video with me ranting, then might be one for you to take a look at. Again, I'll do an analysis on these down the road. Each week, because that's where I like to take the in-depth analysis. But if you're looking for 3 stocks, maybe just to kind of float on your radar and see if it's something you want to invest in, again, for me, that's going to be Dropbox, 3M, and Ecolab. So for once, that's all I have to say. Okay, 14 minutes. This is not a quick video. Anyway, but that's all I have to say for today. So with all of that said, I'm going to wrap it up here. We'll definitely meet again on Wednesday, and you'll see which one of those 3 we're going to do the full in-depth analysis on. So stay tuned for the Watch List Wednesday. But as I always like to say, you can be anywhere in the world and you're right here with me. And I really appreciate that. So thank you so much for taking the time out of your day to watch this video. If you liked it, hit the like button. You kind of know the deal now. If you're new here and like this video, consider subscribing. You don't have to. All I ask is that you consider it. And I guess until then, I will see you next time for Watch List Wednesday. Am I still filming? Oh.